Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm down at the ANZ Centre with ANZ New Zealand CEO David Hisco. Thanks for making some time for us, David. Look, you've written a very interesting article this week, and you've come out and you've highlighted the hot Auckland housing market, the strong New Zealand dollar, I guess the challenges of high immigration and lack of infrastructure or slow infrastructure development in New Zealand, all big important issues and challenges that Auckland and New Zealand have been grappling with for a few years now. What made you come out now and say all these things publicly?
Well, I think we've watched this sort of building, and part of what we see is different parties looking to blame other parties, saying, well, it's your fault, you should fix it, and other people pointing the finger at another party. And we believe that the answer actually lies in a number of people working together, which is why I sort of said in my article, often at the bank we have situations where people sort of wait for somebody else to start, but in reality you need to get in a room and you need to have a coordinated plan. So
we shouldn't take from your article any criticism of, say the Reserve Bank, the government or the Auckland Council?
In fact, to the opposite. What it's probably, what I was hoping doing is to sort of explain to people that not one of those people can fix it on their own, and that people should understand that it is a complex issue and that the answer lies in a number of things, and even then, whatever you do may have another consequence.
And obviously, banks are a part of that as well, aren't they? I mean, I guess one of the things people will say is, well, the housing market is very strong. You've raised some concerns about just how hot it is now, and people will say, hey, but you're the biggest lender lending into that market, so you've played a role in helping drive that up as well. I mean, how do you react to that?
I mean, we're a bank, and so part of the way we generate income is through money lending. That's what we do, but all the same, I mean, our primary interest is to ensure that there's a stable banking system, and the banking market's very competitive. And again, this is a situation where we may have a view that we want to tighten our lending conditions and pull back, but unless there's a generally shared view that now is a time where we need to navigate more carefully, well, then that business will just go elsewhere, and it doesn't actually then solve the issue. And the issue that I think it needs to be looked at is the amount of investor lending in Auckland right now. And for a lot of these people, they are sort of Johnny-come-lately mums and dads who have seen everybody else get on board, and so they think they'll do it too. The point is that if things went bad, they could quickly see the equity in their own home erode, which was used to secure the investment property, and of course the investment property would also go backwards. So it was a warning to say property doesn't always go up.
I mean, ANZ's had a really strong run of mortgage growth in the last, I guess, 3-4 years now. Are you effectively saying from your own perspective that it's time to consolidate now, and you want your competitors to do the same?
Well, look, it's not for us to prescribe what our competitors would do, but what we believe is that clearly wages have not risen in pace with Auckland house prices, and so there comes a point when if we're not already close to it or there, where Kiwis can't afford to get a loan and pay it off. I mean, that was sort of part of the story is, look, this thing's going to come to an end somewhere. It has to, because you can only borrow so much. I mean, they've been helped by interest rates falling a little bit. I mean, we haven't loosened our credit standards. In fact, we've tightened them over time. So interest rates coming down has meant they've been able to borrow slightly more, but it doesn't compensate for the rise in prices. And of course, the more you borrow, the debt doesn't go away. You have to pay it back. And that was the other point that I made in the article, which I think surprised some people, which is that, now is a time to pay your loans off. There is never a better time with low interest rates than to clear debt. Back in the days when interest rates were 17%, if you borrowed 100,000, you'd be paying 17 in interest before you even started on the principal. Well, today, it's more like 5, and so you could use that other 12 to reduce the loan. And some people aren't doing that; they're just borrowing more. And I think we need to remind people that that getting your personal balance sheet in order is a good thing.
Now, the Reserve Bank has obviously proposed this week to set a minimum deposit level for residential property investors who are borrowing from banks of 40%. You've suggested that they perhaps should take that higher, right up to 60%. Is that something ANZ could or would look at implementing off its own bat anyway?
Well, as I said earlier, I mean, the issue if we did it alone is that that you would find you wouldn't actually solve the problem. The business would go elsewhere. I'm not so worried about not doing the business, but when it's going elsewhere, it means you haven't actually really solved the problem other than sort of, doing less business yourself. Part of me saying 60% is saying if we've decided that we should be doing things to limit Auckland investors, well then let's do it. And obviously implementing it 60% would be quite a heavy move. And no doubt the Reserve Bank is probably, not into sort of drastic moves like that, and so they've moved it 10%. And I guess if they don't see much action, they've still got the ability to move it more. But yeah, that was where I was coming from, which is, if you've decided you don't want it, well then get rid of it.
That's property investors.
Yeah, right now. Bad news for them. But in the long run, you might be doing them a favour if you save them an issue later on.
Now, the Reserve Bank's also looking at some other macro-prudential tools, the debt-to-income ratio limits, and they're talking about potential capital overlays or making banks hold more capital against housing loans. Do you think they should implement one or both of those? And if they do, what would that mean for ANZ and indeed your competitors?
It's not. I wouldn't want to be putting out there what I think the Reserve Bank should do. I mean, they make their own calls. We work with them. We consult, and what I've always said to the Reserve Bank is, banks, providing they get time to adjust and make changes, they can generally get their head around whatever changes are implemented, providing there's time.
Now, across the ditch in Australia, obviously there's continuous pressure these days for your parent bank and the other Australian banks to hold more capital. Every week there seems to be someone else saying they should. And also you've got a new group CEO this year, and the ANZ strategy has changed a little bit. Are you guys feeling much pressure coming from across the ditch? Is that part of the reason why you're wanting things in New Zealand to calm down a bit at the moment?
No, I mean, Shane's come on board, and so with the new management team, obviously we've announced a change in our strategy somewhat, but people are generally happy with the direction we've taken New Zealand. Obviously, we've merged the two brands. We've grown the business since then, and we've got cost out of the business, which was part of the reason for doing that. That's made us more competitive. So we've got a pretty clear business model here with a good share of business across all the different parts of the market, and they're quite happy with us keeping our focus on just keeping the steady ship and growing the business slowly. So there's no pressure coming from them. And
you mentioned in your article too, you mentioned funding. I mean, that's obviously an ongoing issue. With I guess, strong credit growth that we're seeing at the moment that has been outstripping deposit growth to some degree. So is that that's obviously that's an ongoing concern for you, that you have to go offshore and raise money. Is that part of the problem here as well?
Yes, it is. I mean, all of the banks or I would say all of the big banks would go offshore and top up. And, I would be suggesting most of the banks would top up for roughly the same amount every year. And if you go offshore and decide you want to top up for double that, you're going to pay a lot more for it. And we sort of get a sense for what we can borrow offshore at around, competitive rates. And then, if we were to go offshore and ask for a lot more, obviously the spread goes up, and then, that has to be passed through as an input cost. So we try and limit how much we borrow from offshore, and obviously New Zealand has a limited amount of savings. So savings are important, which is why I said in the article that I doubt that we could continue to go on lending at heightened levels for a period of time, because we'd have to borrow more from offshore to top up. Excuse me.
Now, you've also talked about the New Zealand dollar, and that's obviously been a real headache for the Reserve Bank for some time. You mentioned that the Reserve Bank of Australia is looking, or at least talking about, I guess, a few unconventional measures. In terms of the RBNZ, I mean, would you like to see them, looking at intervening in the currency markets, quantitative easing? What sort of ideas are you floating that perhaps they could consider?
Yeah, I think there's a limited number of things that they can do. I wouldn't be sure that quantitative easing would be something that they'd be thinking about. But look, the comment was just generally one, which is New Zealand has benefited from export trade. It's helped us build our industries here, and if our currency is sort of out of step with the rest of the world, then people will look elsewhere to actually trade. And being a long way from other countries, if we're looking to sell things, we've got, particularly if it's export product, we've got to ship it further. So we need to be competitive, and historically the Kiwi has been lower, so it's running at a heightened level. And a return to sort of more historical levels, I think, would be helpful in the long run.
Now, you also touched on immigration. Obviously, that's been at record highs as well. And I mean, ANZ and other banks have benefited. I think at a presentation that ANZ did last year to Australian analysts, you noted that immigrants tended to be more profitable customers than average.
Yeah.
To what extent do you think we need to, or the government, or needs to act to slow that down at the moment?
Yeah, I mean, New Zealand benefits from immigration. I mean, so I think people need to understand that immigration's good for New Zealand. The thing that, if you look at the immigration statistics, the thing that's probably been a bit of a surprise has been the length of time of the flow of the trans-Tasman immigration. So this is sort of the longest period where we've seen Kiwis not going to Australia and Kiwis coming home. And that's really put some pressure on the system. And as much as people would like to turn that debate into other topics, the main numbers in terms of immigration is trans-Tasman flow, and that's been a bit of a surprise, which is why it's taking a while for the various people that need to adjust to actually pick that up and deal with it.
So you're not necessarily saying that we should, cap immigration of foreigners coming to New Zealand. It's more we have to look at the trans-Tasman flows. Is there anything we can do about that, though?
I doubt the government would ever do anything about that, and I would think that would be a bad idea. The point is we need to adjust for that. And so again, that means building more houses, which the government is ramping up in consultation with the Auckland Council. As I said, that takes time, but I mean, if you look at this time next year, the number of houses will probably be up 25% again, and so that'll come through. But that was an interesting outcome in terms of trans-Tasman flow, which has been a little bit different to history. But they are the main numbers. I mean, the areas to tweak in terms of immigration are probably, there's not that many options. We still need trades here. And so, but again, it's what I was saying is that everybody needs to look at everything, and if you can make a contribution, any type of contribution, it may help us let the air out of the balloon slowly rather than burst the balloon.
Now, you also mentioned infrastructure, which is another big issue, and just coming up here to interview you, we noticed all the roadworks and things going on all around your office here. Obviously, yes. the rail tunnel work is starting, the convention centre, etc. What particular areas are you thinking of when you talk about infrastructure, and indeed what role can ANZ play in that?
Look, I think, with more people, it puts pressure on things like schools and hospitals, roads. I mean, basically all of those things that everybody knows and everybody talks about. And again, it's not a game of Monopoly. You can't front up with a cash and put it on the board and you've got it tomorrow. It takes time for, and it needs thought around what's the right place to put it and what should the design be, and then get that approved and consult with the right people. And so it just takes time to adjust, and that's why we need a number of parties right now to fly in formation, work together to navigate our way through a time where it's New Zealand's sort of under pressure on a number of fronts. It's partly, we're a victim of our own success. And it's a great city. Yeah, well, I guess it's also more of an international city now, Auckland, and in terms of some of the immigrants coming here, they're comparing it to Sydney or Melbourne or Shanghai or Singapore, etc. And I mean, are we at the point, do you think, where with our house prices and housing market that we should be comparing Auckland to those places or to prices in Wellington or Hamilton? Yeah, well, I think we are becoming one of those world cities. Certainly there's a lot more flights into Auckland now than there's ever been. And it's not just Auckland, it's the rest of New Zealand as well. The thing that I think a lot of us forget is the internet has changed New Zealand forever. It has brought New Zealand close to the rest of the world. And people can do their job now working from Tauranga or Queenstown. And so it has opened up New Zealand as a place that people have always known as a beautiful place, great lifestyle, healthy living, safe. But it was difficult to work from here, whereas the internet's changed that, and I think we probably don't factor that into our thinking around just how much that's brought New Zealand into play. Well, thanks a lot for that, David. Plenty of food for thought there. That's David Hisco, CEO of ANZ New Zealand, and I'm Gareth Vaughan at interest.co.nz.